understand your needs, understand your requirements, understand your shortfall, make a decision on what you want to cover and why, and just make sure you understand the insurances that are being put in place.
Hi everyone, thanks for tuning in to the Mortgage Heroes podcast, proudly sponsored by Hamlet Homes Warrington, your Warrington property experts. Now today in this episode, we're going to be talking everything about insurances. Now we know we can pretty much insure everything, but we're going to try and break this down and understand it with none other than Sam McWilliams. So Sam joined us recently last year and he's our guest expert today to tell you all about the different types of insurances and what's related to do. Sammy Mac.
Hello.
How are you?
I'm all right, yeah, a bit nervous. I've done this kind of thing before, but yeah, not too bad.
You'll be all right, mate.
Good stuff.
So for everyone who has had the pleasure of meeting Sam, you'll know he's a great guy. But Sam, tell us a bit about you, mate. Where did it all start for you in the industry?
Oh, well, yeah. Not in this industry whatsoever. I was in the construction, civil engineering industry for a number of years and basically had a bit of a midlife crisis, bit of a wobble, decided it wasn't for me and wanted a career change. So I basically got into insurances via a friend of mine, a family friend that I know, and effectively set up a business providing insurances for families and individuals. And then that led on to me studying and doing my mortgage advice qualifications and becoming a mortgage advisor. So here I am today.
And at what stage did you lose your hair?
Lockdown, homeschooling the kids,
right.
Trying to work. And it was thinning out anyway, so it was just a case of, right, let's buzz it off. There we go.
Don't blame you.
I think it suits me.
It does? Yeah. Looks all right.
I've got upside down, got the beard and the bald.
Jason Statham vibe.
Absolutely.
I like it. So let's go straight in the jugular then, Sam. What is insurances and why would we need them? Okay, so insurance is effectively a monthly premium that you pay to an insurance provider. Insurances can cover an absolute plethora of things such as you can insure your house, you can insure your contents in your house, you can insure your mobile phone, you can insure your caravan, you can insure your life, you can have critical illness insurance, you can have income protection insurance, etc., etc., etc. You can pretty much insure almost anything. Yeah. Have you got them all?
I've not got them all, no, but I do have the insurances that I feel are most important to me. So
Sam, we work with a lot of first-time buyers. What's the one type of insurance that they absolutely need to have?
Okay, so when purchasing a property, the legal requirement that the lenders that you must have in place for a lender is buildings insurance. If you've got a Santander or Barclays or a Nationwide that are going to be lending you £250,000, £100,000, £500,000, whatever the figure may well be, then they want to make sure that that property is insured. So if anything happens to that property, God forbid, there's a fire, there's a flood, a fire, an explosion, or the house is hit by an earthquake or whatever, a tornado, then basically they're covered. If that house is reduced to rubble, they are covered and they get their money back from the insurer.
Yeah, so making sure really that it's a home buyer, it is a legal requirement, but it's a good thing because it's making sure that if something bad really does happen, you're not having to fork out and rebuild it yourself.
Absolutely.
And what else can you add on to that? Because there are other little add-ons to that sort of policy.
Okay, yeah. So you can get your contents insured as well. So lots of policies come as buildings and contents. So you can effectively then insure your contents as well. So if you are a homeowner and you've kitted your house out and you've got bikes, you've got jewellery, you've got possessions, you've got your sofas, you've got your TVs, you've got your electrical goods and equipment, etc., laptops, iPads, all of the rest of it, you can effectively insure your contents. So again, if there was a fire or if you were burgled, for instance, not only will you get your buildings insurance, if something happened to the house, then obviously your contents as well.
Yeah.
And if you were burgled, then that's when the contents kicks in and you get the cover to replace or buy new items to fill your house back up again.
And what's that experience like? Have you ever had to claim on a contents cover or buildings insurance policy?
Never had to claim on buildings insurance. Touch wood. Never will. But contents, I have personally claimed once, and it was for an iPad.
Yeah.
The iPad got damaged and broken, and we was basically given a replacement iPad within a couple of days. So it's well worth having the insurance for what it costs every month. Well worth having in place.
Yeah, so we had a good example of that of about 4 years ago, 2 days before Christmas, Arthur, my eldest, decided to throw one of his toys, clipped, and I mean literally clipped the edge of the TV. and it sent like all the cracked lines all across it. So we thought, brilliant, we've not got contents cover. I didn't think we had it. And Charlotte was saying, why haven't you got that cover in place? And fortunately, looked through my bank statements and we were paying something. Called them up, 24 hours, sent us 800 quid, straight into Curry's PC World. TVs were on offer and actually ended up with a better TV than the one that we had. Yeah. So I guess for the cost of it, if you're going to bundle it all together, it's definitely worth considering. We know we need buildings cover anyway, but it's also mindful to have contents as well.
Absolutely, yeah, absolutely.
So the other types of insurance that we'll move on to when we're looking at buying a home is life insurance. Do we need life insurance? What is life insurance? Is it worth having?
Okay, so a few questions there. I mean, life insurance, for me personally, yes, it's definitely worth having. I'll come on to that in a moment, but you're not legally required to have life insurance. You don't have to have life insurance, but what life insurance gives to you is peace of mind. You don't put life insurance in place for yourself. You put life insurance in place for your husband, your wife, your family, your kids, your loved ones. So God forbid anything was to happen to you, then a lump sum would be received, and that lump sum could effectively take care of the family in your absence.
Yeah, and is it expensive, life insurance?
Life insurance, no, it can be really cost effective. There's lots of variables with regards to life insurance. So the premium can be dictated by your height, your weight or your BMI, your age, your occupation, if you're a smoker or a non-smoker. There's loads of different variables, but again, you can pop in place any form or any amount of life insurance that you want in place subject to a budget. So there's various types of life insurance, or various lenders that provide life insurance. There are different types of insurance as well. You can have different terms. So you could well be insured for 15 years. You might want to insure yourself for the length of your mortgage, 25 years, or you might want to insure yourself until you retire at the age of 70. So again, the length of term dictates the premium that you'll pay. As will the sum insured, as will, as I said before, your occupation, your height and your weight and everything else.
Yeah, so it's measured and calculated on a number of different things, which is why Absolutely. It's important to understand exactly what it is you need. Exactly. So the next thing then, linking on from that, critical illness cover, is it the real deal or is it a myth?
Critical illness cover, really important in my opinion. Again, God forbid you were to become critically ill, and most critical illness in policies cover a plethora of conditions. Each provider cover different numbers of conditions. So if you're going to put critical illness in place, it's worth having a quick look as to the number of conditions covered, what provider is giving you what conditions. But they all cover, your heart attack, your stroke, your main cancers, all cancers or cancers. So they cover the main illnesses, the main critical illnesses. I mean, 1 in 2 of us is going to get cancer. Don't know the statistics on heart attack. Is it something like 460 a day in the UK have a heart attack and pass away?
Like every couple of minutes.
Every 3 minutes, someone has a heart attack. So it's well worth putting some critical illness cover in place. And again, it works on the same basis. If you become critically ill, you're diagnosed with a critical illness, then if it's a condition listed in the terms and conditions of the policy for the provider, they pay you out on that condition. And then you've got a lump sum. So if you're off work and you're unable to work, you can't go to work because you are critically ill, you may well have lost your income into the household. So it's going to sit there, it's going to come in, you're going to have a pot, it can cover the income that's not coming in. You can do with it whatever you like. You can pay a chunk off your mortgage. You can use it to go around the world if you want to. It's a critical illness payment. It pays out to you as the individual. But if you're sensible, you could use it for treatment, or you could use it for covering those bills that your income wouldn't be covering anymore.
So I guess really life insurance is for when you're not around.
Yeah,
that's when the most benefit is.
The way I see it, life insurance is not for you. Although I have life insurance, it's not for me. I won't be here. I'll be gone. But it'll pay out and make sure that my wife and my children are financially secure. God forbid anything happens to me. And just going back onto life insurance, you can take it over numerous terms. You can insure yourself up to the age of 90 on a standard term. You can actually do a whole of life policy as well, which effectively means that, if you live to 113 and then you pass away,
nice.
It will pay out because you've got a whole of life policy. They're not the most cost-effective policies because it's a guaranteed payout. But, most people will insure themselves up to an age that they feel comfortable with. I've got clients that have insured themselves up to retirement age because then they're happy and the house is paid for. I've got other clients that have insured themselves for longer just to ensure that, God forbid, anything does happen to them, maybe in the 70s, 80s, then there is still a payout for the family that will be left behind.
Thanks for tuning in to the Mortgage Heroes podcast, proudly sponsored by Hamlet Homes Warrington, your Warrington property experts. Okay. And how does that differ then from another policy that we discuss with our clients, income protection? So someone gets statutory sick pay or gets some entitlement of sick pay from the employer. What's the income protection side all about?
Okay, so the income protection basically supplements or replaces the income that you will not be earning. So if you were off work and your statutory sick pay had run out, or even if you're just obtaining statutory sick pay, it's peanuts really, isn't it? It's not a lot of money. Chances are it's a hell of a lot less than what you're earning as an individual every month. So income protection effectively replaces your income. So you put an insurance policy in place, you pay a monthly premium, and if you're unable to work, I don't know, say you slip a disc in your back, or you've got pneumonia and you're off work for 3, 4, 5, 6 months, or you've got some form of condition that makes you or renders you unable to work, then your income protection policy can kick in. It can kick in after a week, 2 weeks, 3 weeks, 4 weeks. You can defer the period for as long as you like. The longer the deferment period, the more cost effective, so the lower the premium is each month. So if I was to have income protection in place and I deferred it for 3 months, it would be a lot less than that policy kicking in after it would be for 1 week. So when we have conversations with clients, we discuss, what levels of savings you've got. Could you supplement, and would your savings cover 3 months worth of income? Are you happy for that, or would you prefer your income protection to kick in after a month? And basically just see what's best to suit the client's needs.
Sounds like a headache, right? So where would you start? You've just given us there so much information about life insurance, critical illness cover, income protection. There's hundreds of ways of setting them up. I'm probably going to sit looking at you, Sam, thinking, I haven't got a clue where I'm going to go with this. So how would someone decide what's right for them?
Okay, so my opinion, speak to somebody that knows what they're talking about. Don't go on Google and go compare and think, right, what do I need and how long do I need it for? The amount of policies I've rewritten over the last couple of years with regards to people that have been on Go Compare or other comparison sites, and they've just not got adequate levels of cover in place because they don't understand the shortfall and what they need and the situation that they're actually in and the circumstances. So what we do as advisors, we just have a chat a little bit like this. Yeah. Tell me about yourself, your situation, your circumstances. Do you have family? How much you earn in each month? Could you afford not to be earning that money each month? With regards to the life insurance, how much is left on your mortgage? Would you like to leave additional lump sums behind to cover the salary that wouldn't be coming into the family? God forbid you couldn't be working. That you've passed away, and obviously you're not working, you've passed away. Yeah. We just literally have an in-depth discussion and conversation to suit the client and around the client's needs, and we discuss different options that will hopefully give them the cover that they require at a premium that's affordable to them as well.
Now, all I'm seeing here, or all I'm hearing is, this is going to be expensive. So as a lot of people listening into this podcast and insurances who might be buying the first house or looking to protect some of their assets, is thinking, how much is this going to cost? So there's obviously got to be some sort of fine balance. But how does someone determine what a reasonable premium is for them? Because as you alluded to before, your height and weight might be a factor into it. What your mates have isn't what you might have because they might have a different mortgage, or someone might have kids and you've not got kids. So how do you help someone determine what a decent budget is and maybe something to work towards?
It might be slightly different to what you work off, but I tend to work off around about 2% of your net income. So 2% of your net income each month. If you're using that as a premium to cover insurances, you're going to be there or thereabouts with regards to what level of cover you potentially, as we say, we'd have to do the whole analysis and discussions with the clients. But insurance can be as cheap as you want it to be. Effectively, you can have life only cover. You can have it on a level term. Level term basically means that if I personally was insured on a level term for £100,000 until I was 70, if anything happened to me between now and the age of 70, it will pay out £100,000. I could have a decreasing term. Lots of people get decreasing terms. They decrease pretty much in line with your mortgage, and effectively will cover your mortgage if anything's to happen to you. So on a decreasing term, if I was insured for £100,000 until I was 70, actually that £100,000 is decreasing every year. So when I'm 65, there might only be 5 or 6 or 7 grand left in the pot. So if anything happens to me at 65, it might pay out £5,000 or £6,000. So that's obviously a cheaper policy, because as you get older, it's going to pay out less. You can also then go for an index policy, which goes the opposite way to a decreasing term. Effectively, that means that the sum insured will go up each year, basically with inflation. So if I was insured for £100,000, that might be £150,000 by the time I'm 70.
Yeah.
Again, the premium would be more for an indexed policy, because the level of cover will be increasing each year. So we can really work with people with regards to tailoring requirements to the needs, making sure that, we pop the right insurances in place. You can also get critical illness cover on the level and decreasing terms as well, and the index terms also. So yeah, we literally just have in-depth conversations with clients, understand the needs, understand the requirements, and just make sure that they're happy with the level of insurance that we've put in place within the budget.
Perfect. And what would you say to someone, Sam, whereby they've had this chat with you or another advisor, and they understand everything that you've told them, all the policies available, and they want them all, but they just don't have the budget to do so? How would you approach that with somebody? What would you tell them you can work towards? Or do you know what I mean? So if they say, listen, my budget's £10, Sam, but I know I need it all, what advice would you give to someone in that sense?
I'd probably say in that, well, look, you've just hit the nail on the head. You can't afford it all. So you as an individual at this point in time, what's the most important to you? What do you feel needs covering and insuring the most? So would that be your life, or would that be the critical illness, or would that be you want some income protection? What's most important to you? Let's pop something in place to make sure you have that level of insurance. And then in a couple of years, if you're first time buyer, you're just stepping on the property ladder, your salaries might be increasing, your mortgage might be decreasing over time. A couple of years, let's have another review. Maybe we can pop more insurances in place if it's more affordable at that point in time. But for now, I wouldn't walk away and not put any insurance in place. I'd make sure that you've got a base covered rather than all of the bases covered, just to make sure that, God forbid something
the worst happened,
you might want to put your life insurance in place. If you're hit by a bus tomorrow, you know that your wife and kids, or your partner and your kids are covered.
Yeah. Okay. So we've got to that stage then when we're looking at insurances. We know what we need. We know what the budgets are. And now we're just trying to find out who's the best provider. So unlike mortgages, where you can go online and find just like an interest rate and think, yeah, I want that one. How is it different with life insurance? I mean, how do you find the best provider?
Okay. So we have systems in the background we crunch numbers into. It fires up all the different lenders and their rates and their costs. The premium is dictated by the market and the information you put into the computer, such as your height, your weight, everything I said earlier on, basically, your occupation, etc. But basically, it's difficult because providers do provide or offer different products. So, for instance, I'll make the number up. Zurich might offer or cover 100 conditions on critical illness. Aviva might cover 105. AIG might cover 88. Now, don't take those numbers as gospel, but, dependent upon the policy, they all do have slightly different conditions that they cover. So some clients are happy that they've effectively got some cover in place. I've got cover. I'm not really bothered. It's cost effective. I just want some form of cover that will cover the main kind of illnesses, the cancers, the heart attacks, etc., the strokes. Other clients would want to look more in depth at the actual conditions that are covered. They may well be family history of conditions, etc., that they want covering, so that we can effectively pull up and run off information that will show the conditions covered on a lender by or provider by provider basis. and go from there with them.
And what about things like existing medical conditions or height and weight or family history? Does that impact ultimately who we can go with for insurance?
Can do. It can impact who we can go to. It can also impact the monthly premium. So, for instance, if there is an issue with height and weight and your BMI is above the average, chances are that your premium will what we call loaded. So in that instance, the lenders look at the information and they add a percentage rating onto the premium. Some it might be 25%, might be 50%, might be 75%. Same goes for lots of other conditions such as high blood pressure, cholesterol, etc. But yeah, any family conditions, any medical conditions, any medical issues, any medications that you're on, they have to be disclosed. And there's a questionnaire that you run through at the end when you're signing up and putting the policy in place. The medical questionnaire has to be spot on, 100% truthful, because God forbid anything was to happen to you and you haven't told the truth, then you may not be paid out on the policy because they can request doctor's records, medical records, or general practitioner's reports, as they call them.
That's where the horror stories happen, I guess.
Yeah, exactly. So just be honest, just be truthful with your advisor. Make sure that you give them all of the information they need to put the right level of insurance or the right type of insurance in place for you.
So it definitely sounds like it's not a one-size-fits-all when it comes to insurances.
Not at all. No, not at all. It's a bit of a minefield.
Is that why you've got no hair?
Yeah, well, one of the reasons. 3 kids is the other, I suppose.
Yeah.
But no, it is. It's an absolute. It's a minefield, and one size does not fit all. What's right for me wouldn't be right for you. What's right for you might not be right for your brother, etc. So. Yeah, it's absolutely, it's tailored to the individual and their situation and circumstance.
Okay, so Sam Mac, take me in your mind and assume, right, that I'm a first-time buyer and we've got a couple of kids and I'm saying to you, look, I'm erring on the side of caution with budgets, but I need a little bit of something. And I get this is quite ambiguous. There's loads of different permutations what you can say. But what would you be saying to me, who's someone with 2 young kids, buying my first house, in terms of insurances, what should I be looking for?
Okay, so subject to your budget really, and what you can afford. If you want something in place, but budget is an issue, then as a minimum you want to be looking at covering your mortgage. So God forbid anything was to happen to you, the mortgage is cleared. Then you've got that little bit of peace of mind that your wife and children can continue to live in that property. They won't have to sell the property, fingers crossed, because they don't have a mortgage. So the income that you was bringing into the household, if you passed away, it's gone. So you can't pay the mortgage because you've not got the money coming in, or your contribution towards the mortgage has disappeared. Cover your mortgage as a minimum. At least then for a fact that your family are covered and they've got somewhere to live.
Bit of a peace of mind.
Yeah, exactly that.
And like you said before, you can work towards adding all the other stuff on as careers change, incomes change, priorities change, you have more kids and that sort of thing.
Absolutely.
Cool. So Sam, before we let you go today, I want you to tell us what's your absolute golden nugget when it comes to finding out what the best insurance is for you.
Okay, so golden nugget I'd probably say is take your time. We're in the age, aren't we? Everybody wants everything now. People are very spontaneous. Let's just do it. Let's just get it. Let's just have it. Insurances are really important. So sit down, take the time, speak to the advisor, understand your needs, understand your requirements, understand your shortfall, make a decision on what you want to cover and why, and just make sure you understand the insurances that are being put in place. Understanding, absolutely. Make sure you understand and don't rush.
The last thing you want to do is sit there at 10 o'clock at night and set up a life insurance policy only to find out it's nothing that's not right for you.
Exactly.
Which wouldn't be very good. Exactly. I know it'd just be my luck that I'd set up the wrong bloody thing, but good job. I know what I'm doing.
An advisor, come to me.
Yeah, just let you do it. Perfect. Well, Sam, listen, mate, it's been fantastic having you on today talking about all the types of insurances. How would somebody get hold of you? Want to have a little chat?
Easy. Contact Warrington Mortgage Centre. Ask for me. Ask for Sam McWilliams, Sam Fox, or anyone else in the team. Brilliant.
Perfect. So, guys, you've been listening to the Mortgage Heroes podcast, proudly sponsored by Hamlet Homes Warrington, your Warrington property experts, and we look forward to seeing you next time.